Hi, I am Varun Gupta, Director and Head of Axis Partnership at Max Life. I'm very happy to be here with all of you, and thank you, Asia Advisors Network, for having me here. If we look at the individual sales in the private life insurance sector, the overall industry has grown by 8% in FY21, and the growth accelerated to 26% in Q1 of this year. Bank insurance business continues to be 57 to 58% of the sector, and hence is enabling this industry growth. Max Life Banca business has outpaced the market, with our Banca sales growing by 30% in FY21 and 50% in Q1 of this year. We are very pleased that the way we have brought sales momentum in the last 12 to 18 months, and it's even more heartening that this market benchmark growth has happened at a very uncertain period. How has life changed after COVID? I believe life insurance need is at a subconscious level of a customer, and hence when a banker or an agent reaches out to the customer, he has to do a hard sell to bring this need up. We also know that when there is a life stage trigger, the need surfaces. A trigger like a death of a family member or a health scare in the network. COVID is a large scale trigger. What it has done is it has created greater realization amongst the customers to protect ourselves from risks which we have. And look at the trend of Google searches in the last 12 to 18 months. The life insurance searches and the term searches has significantly grown versus last year. Whether banking, insurance, or any other industry we talk about, I don't think we can think of a world in the next 3 to 5 years without technology playing a pivotal role. We know that the consumer habit of using online and mobile banking has accelerated post-COVID. And a recent survey across markets have shown 30% increase in the online and mobile banking behavior. If we see around, banks are making significant investments in technology, and many of them are creating separate digital banks to disrupt themselves. So clearly, with the objective of digitalization, the convenience to the customer is one clear trend which is here to stay, and disruption will continue to happen with this objective. The most important shift which is required in banca is the behavior of customer centricity. Life insurance industry has taken big strides in the last 10 years with the regulator creating customer-centric products. And that has created a significant lift in the customer confidence, trust, and loyalty towards life insurance products. It is clearly visible in the persistency rates, which have increased across the companies in the last few years, as well as how the complaints have come down. Complaints incidence rates have come down across insurance. However, we still observe that these quality measures in the banca space can further improve versus the other distribution models. And it is extremely critical that banks who have larger relationships with their customers take some of these measures. We need to stay obsessed with the customer needs. And while banca models have taken actions in some shape and form, I believe that the market conduct improvement is the need of the hour. Another key aspect of our future success is how do we evolve our distribution models. We know that the customers are becoming comfortable with online and mobile banking. And when we look at our relationship manager model, we know that our relationship managers in the banks are able to cater to only about 15 to 20% of the bank's customers. So actually, if you see, the bankers' relationships are concentrated, while banks have at-scale relationships. And therefore, an approach that is rapidly gaining traction is the idea of using a distribution model that combines both physical and the digital channels, which we call a phygital model. A blend of digital and mobile services with brick and mortar. You can take advantage of the strengths of each channel. And I see use of digital channels expanding further as new technologies become available and enable financial services companies to create differentiated offers, propositions which are competitively priced, and there is value for money. But even as customers are turning to digital and mobile channels, they will continue to value human advice, often in person, and making physical channels an essential service that adds value at certain points. If you actually see this emergence, phygital distribution models creates a model of interdependence between human advice and the automated virtual intelligent assistants. From a time of being completely dependent on the relationship manager or the agent, there is a shift towards being interdependent in a very effective digital distribution model.